All right, welcome back. Today we're diving into Bitcoin. You sent over a Fidelity article and a YouTube video transcript all about Bitcoin trends. And basically you want to figure out, is the bull market over or is this just, a temporary dip?
Yeah, tough to watch your investments just kind of sit there. Or even worse, shrink, especially with all the conflicting opinions flying around about
Uh,
crypto.
oh, totally. It's a
Yeah.
real nail biter, especially with, like that Fidelity article pointed out. Bitcoin's been kind of stuck in this range since it hit that peak, like way back in March, around $73,750. And then, ouch, there was that drop down to like 49,220 in August.
Oh, yeah.
But then there's also this really interesting thing the Fidelity article mentioned about all the Bitcoin ETPs, those exchange traded products all over the world. They now hold over 5% of the total Bitcoin supply.
Yeah, over 5% of all Bitcoin is held by exchange-traded products. Basically, it bundles Bitcoin into a more traditional investment that folks can trade on regular stock exchanges. 5%, that's huge.
Yeah. What does that even tell us?
I think it means that big institutions are placing some serious bets on Bitcoin. Could be a major sign of what's to come.
Hmm. Maybe that August dip wasn't the end of the world then. Sounds like these institutions might be seeing it as, like, a buying opportunity.
It's possible. The Fidelity expert in the article points out that these kinds of pullbacks, these dips, they're actually pretty normal for Bitcoin, even during bull markets. They say Bitcoin has historically seen drops of like 20 to 30% or even more, and it's bounced back even stronger each time.
Okay, that is reassuring, I'll give you that. But if these institutions are so bullish on Bitcoin, like why hasn't the price taken off again? What's going on behind the scenes?
Well, that YouTube video you sent over gives some pretty interesting clues. One of the things it talks about is whale accumulation.
Whale accumulation.
Yeah. Imagine like a giant whale swimming under the surface,
Huh.
silently gathering up more and more Bitcoin. That's kind of what's happening right now, even though the price isn't making big headlines. It's like they're, getting ready for something big.
Okay, so these whales, these big players, they're holding tons of Bitcoin. They're actually buying even more, even though the price is kind of just like sitting there. Sounds like they're betting on a big surge in the future. But I mean, how do we know that's not just wishful thinking?
Well, the video shows this whale accumulation chart that tracks this activity, and it's pretty compelling. Remember back in 2020, there was that period of like quiet accumulation right before the massive bull run in 2021. The chart is showing a similar pattern now, which suggests we might be much earlier in the accumulation phase than we think.
Okay, starting to get a little picture here. We've got big institutions gobbling up Bitcoin through those ETPs,
Yeah.
and then these whales are quietly accumulating even more. It definitely sounds like some serious bullish energy building beneath the surface. Anything else that's kind of pointing in that direction?
There is actually. The YouTube video also talks about something called ODL waves.
ODL
The
waves.
HODL. So imagine all the Bitcoin out there as waves crashing on a beach, right?
All right, I'm picturing it.
Some waves are short and choppy. Those are the people buying and selling quickly. But other waves are long and rolling. Those are the folks holding onto their Bitcoin for the long haul. Those are the HODL waves. And they can tell us a lot about market sentiment.
Okay, so like if you see a lot of those long rolling HODL waves, it means people are holding on tight, expecting the price to go up, right?
Exactly. And what's interesting is the video points out that Bitcoin's one-year HODL wave, it has shrunk considerably, meaning there are a lot more new buyers coming in and holding on to their Bitcoin, which is generally seen as a bullish sign.
Hmm. Yeah, makes sense considering those spot Bitcoin ETPs the Fidelity article mentioned. Those products make it easier for new investors to like get into Bitcoin,
Yeah.
which would explain that shift in the HODL wave.
Russell, it all fits together. Now get ready for this because the YouTube video then drops a mind-blowing concept. The inflation-adjusted Bitcoin price.
Inflation adjusted. What is that?
Basically, you adjust Bitcoin's price for inflation, taking into account, the declining value of traditional currencies like the US dollar. And guess what? We haven't even hit Bitcoin's true all-time high yet.
Wait, so even though the price of Bitcoin seems high right now, compared to what it could be given inflation, it's actually still undervalued.
That's the idea. Different way of looking at things. Suggests there's still a lot of room for growth.
Wow. Okay, mind-blowing is right. So we've got the whales, we've got the HODL waves, and now this inflation-adjusted price, all pointing towards a potential bull market brewing. But what do the experts think? Surely this YouTube video mentioned some predictions, right?
Oh, absolutely. And they're pretty bold. Bernstein Research, for example, they're forecasting that Bitcoin could reach $200,000 by the end of 2025.
$200,000. That's a lot. Are they just throwing a dart at a board, or is there like some logic behind that prediction?
Well, the fascinating thing is that Bernstein, they aren't just looking at charts and market trends. They're looking at the bigger economic picture, things like rising inflation, growing U.S. debt. They argue that in this kind of environment, a limited supply asset like Bitcoin, it becomes even more attractive. And get this, they consider that $200,000 target a conservative estimate.
Conservative. Wow. Okay, so we've got some serious analysts backing up this bull market theory. Anybody else chime in?
Of course. The video also mentions Michael Saylor, the Bitcoin maximalist himself. He believes we're still in year zero of institutional adoption.
Year zero.
He's saying that things like full regulatory acceptance, bank involvement, and proper accounting standards for Bitcoin, they're still in their early stages. Saylor thinks that 2025 could mark year one of a massive institutional investment wave.
So if he's right, we're about to see like a seismic shift in how institutions view and interact with Bitcoin.
Hmm.
And that could send the price skyrocketing. But what about other cryptocurrencies? Did the Fidelity article say anything about like how Ether's performing?
It did. And it seems that even with the launch of spot Ether ETPs, similar to those Bitcoin ones we talked about, Ether has actually been underperforming compared to Bitcoin.
Interesting. Any ideas why that might be?
Well, the article offers a couple potential reasons for optimism, at least. First, they point out that outflows from Ether ETPs are decreasing.
So investors might be starting to feel more confident about Ether's long-term prospects.
That's one interpretation. And second, they mention these upcoming institutional filings, specifically Form 13Fs, which could reveal wider institutional interest in Ether than we currently realize.
So maybe there's more going on behind the scenes than we know.
Exactly. It's all very much a developing story.
Okay, this is a lot to process. We've got so much info about Bitcoin, its potential bull run, even a glimpse into what's happening with Ether. Let's pause here for a moment. Let you, our listener, digest everything we've discussed. What's jumping out at you? What initial reactions are you having to these different pieces of the puzzle?
Yeah, it's a lot to take in. Lots of moving parts in this Bitcoin market.
For sure. And we're not even done yet. But before we get back into those expert predictions and, the potential for that massive institutional wave in 2025, I think it's important to remember that Bitcoin, and in crypto in general, it can be a pretty wild ride.
Absolutely. Even if all the signs are pointing to a bull market, it's not going to be, a straight shot to the moon. Remember those 20 to 30% drops the Fidelity article mentioned?
Yeah.
Those can happen even during, like, the most bullish of times.
Totally. So, got to be prepared for some turbulence along the way.
Yeah.
Not just about getting caught up in the hype, but also being able to weather the storms.
Precisely. And that's why having a solid investment strategy is key. You don't want to be making decisions based on emotion, whether it's the excitement of a potential surge or the fear of a sudden drop.
For sure. So speaking of strategy, if someone's listening to this thinking, whoa, I need to get in on this Bitcoin action, what advice would you give them?
Well, first and foremost, do your research. Don't just jump in blindly because you heard some, interesting theories on a podcast. Understand what Bitcoin is, how it works, the potential risks and rewards. It's an exciting space, but it's important to be informed.
Oh, absolutely. Knowledge is power, especially when it comes to investing. Speaking of power, that YouTube video's analogy of the spring being compressed, can you remind us what that was about again?
Of course. It's a really powerful image. So the idea is the longer this period of consolidation and, sideways price action goes on where Bitcoin is basically stuck in a range, the more pent-up energy is building up in the market.
Like a coiled spring just waiting to be released.
Exactly. And when that release finally comes, the move could be explosive.
So the million-dollar question, when will that spring uncoil? What's going to be the, catalyst?
That's the tough part. Predicting the timing. Nearly impossible. But the YouTube video suggests that increasing institutional adoption could be a major trigger. As more big players allocate capital to Bitcoin, it creates this, scarcity effect, pushing the price upward.
And if Michael Saylor is right about 2025 being, quote, year one of this massive institutional wave, that uncoiling could happen sooner than we think.
Definitely a compelling theory. And we can't forget about the potential impact of regulatory clarity. As governments around the world develop, clearer frameworks for crypto, it could encourage even more institutional participation, which would further fuel the fire.
Right. The Fidelity article mentioned that regulatory uncertainty, it's still a factor holding Bitcoin back. So any positive developments on that front, that could be a major catalyst. And it's not just regulations. We're also living in a time of Major global macroeconomic uncertainty. Inflation, geopolitical tensions, worries about a potential recession. Wouldn't be surprising if more people started looking for, like,
Yeah.
safe haven asset.
Absolutely. And Bitcoin is increasingly being seen as like a digital gold, a hedge against traditional financial systems. So those macroeconomic factors, they could definitely play a role in pushing Bitcoin's price upward.
Wow. So we've got institutional adoption, regulatory clarity, global macroeconomic uncertainty, all potentially converging in the next couple of years. It's a lot of fuel for the Bitcoin rocket.
Definitely paints a picture of a potentially explosive market, but crucial to remember, this is all speculation. Nobody can predict the future with 100% certainty.
Right, got to stay grounded. Remember that investing in crypto, inherently risky. But it's also exciting to think about the possibilities. Speaking of exciting possibilities, let's go back to Ether for a sec. Remember how the Fidelity article mentioned that it's been lagging behind Bitcoin?
Yeah, I remember. Important to remember that Ether and Bitcoin, while they're both cryptocurrencies, they have different functions and underlying technologies. Bitcoin, it's often seen as a store of value, like digital gold, while Ether is the native token of the Ethereum network, which powers like a whole ecosystem of decentralized applications and smart contracts.
So their prices might not always move in sync,
Yeah.
but the article did offer those two reasons for optimism about Ether, right?
They did. Those decreasing outflows from the Ether ETPs, they suggest that investor sentiment might be shifting.
And those upcoming Form 13Fs, the institutional filings, could reveal some hidden institutional interest in Ether. Sounds like we might need to do a whole deep dive dedicated to Ether
Yes.
to really unpack its potential.
That's a fantastic idea. But for now, let's take a moment to reflect on everything we've learned about Bitcoin. It's been a whirlwind of information, and I imagine you, our listener, might have some questions swirling around right now.
Okay, we're back. Final stretch of our Bitcoin deep dive. We've covered whale accumulation, inflation-adjusted prices, expert predictions, the potential for this big institutional wave in the coming years. It's a lot, but it's also super exciting to see how all these pieces are starting to, fit together.
Definitely complex, always changing, but that's what makes it so fascinating. As we wrap up, I think it's good to highlight a few key takeaways for you, our listener, as you navigate this exciting world of crypto.
Absolutely. So what are the most important things to, remember as we move forward?
Well, first and foremost, Bitcoin, even with all its potential, it's known for its volatility. Those 20 to 30% pullbacks we talked about, they can happen even during the strongest bull markets.
So don't panic sell just because you see a sudden drop.
Exactly. Long-term perspective is key here. Ride those waves, remember the bigger picture. Second, keep those underlying trends in mind. The whale accumulation, the HODL waves, the inflation-adjusted price, all of it. They give you really valuable insights into the market and potential future price movements.
Like having a secret decoder ring for the crypto world.
I like that. And third, keep a close eye on institutional adoption. Remember Michael Saylor's prediction. 2025, the year institutional money floods into Bitcoin, could have a major impact on price.
And don't forget about those regulatory developments. More clarity, more acceptance from governments. Huge catalyst for even greater institutional investment.
Absolutely. And finally, never forget that investing in crypto, like any investment, involves risk. Do your research, make informed decisions, and never invest more than you can afford to lose.
Solid advice. Okay, so we've got the key takeaways, but before we sign off, I want to leave you with one final thought-provoking question. If those experts are right, and 2025 really is the year institutional adoption explodes, what does that mean for your investment strategy?
Do you hold on to your Bitcoin and ride that wave? Do you double down, increase your position, maybe diversify into other cryptocurrencies like Ether, which could have its own growth spurt?
Or do you stick to your current plan and just wait and see? No right or wrong answer. Definitely something to think about.
The beauty of all this is that it's constantly evolving. Always more to learn, more to discover.
Exactly. So keep exploring, keep learning, and most importantly, stay curious. Remember, even experts can be wrong, so always do your own research. Make decisions that you're comfortable with. That's it for this deep dive into Bitcoin. Thanks for joining us. And until next time, happy investing.